Alright, what's up, you guys? Today I'm going to go over supply and demand, how I use it, how I spot it out, what it is, and why it works, okay? Also, if you see me looking down, I have a bunch of notes here that I want to go over, and I really want to make sure that this is a very detailed video, okay? So, first of all, what is supply and demand? Supply is just aggressive selling, and demand is aggressive buying. Okay, so let's look at how I spot aggressive movements, right? Specifically, supply and demand. Okay, and I'm actually gonna show you guys an example. So I'm going to be charting as if it was last Friday. Okay, so boom, this would have been a beautiful supply zone, right? We have an aggressive move with a basing candle. And that's actually what I want to talk about, is specifically how I spotted out is I want to look for an aggressive move, but before the aggressive candle, I want to see a tiny candle, and this is just called the basing candle, and it's very important because it's how you're going to draw out the zone. Okay, you don't draw out the zone from the biggest movement, you draw it out from the candle before it. Okay, this could also be a small, tiny supply zone, right? I wouldn't count this as a supply zone just because after the aggressive move down, it kind of chops around, right? I want to see an aggressive move down followed by a continuation, or another thing is, let me see if I can find kind of a better example of it, is when there is an aggressive move, price taps into that area. Okay, this is perfect right here. This is what I'm talking about. Okay, this right here. We see an aggressive move up with a little tiny candle, and then price taps into that area, and I think we reject it. Yeah, we reject it. Okay, so this is another example right up here. We have aggressive selling, we tap into that area, and there's an aggressive move down. So if you're ever questioning if a zone is supply and demand, a hint of that could be, has price tapped into that area and how have we reacted towards it? Like right here, aggressive move up, price taps into this area and it moves up. So that's kind of a confirmation, but most of the time you're not going to have that, right? So most of the time you're just going to have to kind of know that it is supply, like this. There isn't any hints that it is, but I'm just saying, like, a lot of the time you're going to see that, like right here. It's not the best, supply zone, but I kind of would have marked this out just because we tapped into that area and we moved down. Okay, so now that you kind of know how to spot it out, there is multiple different ways on how you can draw out the zone, right? A lot of people do it differently. Every type of different way that people draw the zone, it works. Okay, it's personal preference, right? Everyone's gonna have their own sweet spot in the market, so whatever works for you works for you. What has worked for me personally is going from the body to the wick, right? So I use this rectangle tool, and I have it so it has this dash line, which I'm going to talk about soon. But if you want the settings for it, I have the middle line, and then these are the settings. I mean, I really don't have much, right? But that's how I get the dash line. A lot of people were asking about that. But how I draw it out, okay, how I draw it out is I go to the zone, I look at the basing candle, I draw it out from the body to the wick, okay? That's how I do it with basically everything, body to wick. Okay, let's find a demand zone so you can also have an idea of that. Again, from the body, not the wick, the body to the wick, okay? So boom. Now, as you can see here, This demand zone didn't have a nice reaction off of it eventually, right? Like, yes, we bounced off of it, but eventually we broke through it. And it doesn't mean that the zone is invalid. At the end of the day, and this is also what I need you to understand about supply and demand, is that supply and demand is just areas where there is a lot of orders, right? That's what caused the big movement in the first place, okay? So just because there's a lot of orders, it doesn't mean that just because it's a demand zone, it's always going to go up from there, right? So that's where my 50% line comes in, right? My thinking is that if we break past the 50% line, we're obviously going to continue going through it, okay? You can see it right here. So that's my thinking on this 50% line. If anyone was wondering, that's why I have it, okay? And of course, like, it's not gonna work 1,000% of the time, but I would say 80 to 90% of the time, it's very accurate and it definitely works, okay? Let me look at the next thing I want to talk about. So I talked about how to spot it out, how I draw my zones, why I have the 50% line there. Obviously, like I just said, just because it's demand doesn't mean price is always going to bounce off of it. And quick tip here, the more we bounce off of a zone, like for example, let's say we've bounced at this zone 3 times, we're most likely going to break through it, okay? Just a little tip there. And let's see here. How I use supply and demand is I start from the 4 hour time frame and I literally check, okay, where is there aggressive buying on this time frame? Boom, right here. This is perfect. And then I kind of go down from there. I go down 4 hour, 3 hour, 2 hour, 1 hour, all the way down to the 15 minute, sometimes 5 minute. Okay. So let's say, I looked at everything. And specifically, I'm just going to mark out the zones that I was looking at Friday. Yes, I had multiple zones on Friday, but it's not like I took a trade off of every single trade. I literally just took a trade off of this zone right here. Anyways, I'm also going to mark this 2 hour that is way far behind, but it's very important because, as I just mentioned, the more we bounce off of a zone, the more likely we are to break through it. And it's exactly what has happened recently, right? Like the whole month of March, we were bouncing off of this 2 hour demand zone. And then just on Friday, we closed below it. And this is also a side note, but just because of this, we have a 2 hour candle close below my 50% line. I am expecting NASDAQ to go lower than what we are right now. Okay, if you don't know, recently NASDAQ has been on a huge downtrend. And we're kind of consolidating the whole month, which is a huge reason why a lot of traders have been struggling because not much has happened in the market, right? But we just kind of broke this support zone slash demand zone, so I am expecting us to continue down. The only thing that is kind of holding me back from maybe if we do continue to go down is this liquidity down here, right? Anyways, oh my gosh, I'm getting off topic here. But okay, these are the only zones that I'm going to draw out today, right? And then let me also draw out this small 2 hour one. I'm pretty sure I had this one. Okay. Of course, there is going to be a bunch of other zones, especially on a smaller time frame, but my goal is always to go based off of the higher time frame supply and demand zones. Why? Because they cause bigger movements. There's bigger orders there, right? Because it causes a bigger movement. So, for example, let's say there was a 15-minute time frame supply zone right here. Let's say it was in this little area here. I would focus on the bigger time frame zone, which for this example, it's a 45-minute zone, right? But let's just say there was a 15-minute zone within this zone. I would not draw the 15-minute zone. I would stick to the 45-minute because again, it's a higher time frame zone. It might be more accurate and it might be basically like a summary of the 15-minute zone. Okay, so you might have a better entry or whatever. But yeah, you're going to see that a lot where maybe you see a 1 hour zone. Oh, yeah, this is a perfect example right here. Literally, 45-minute zone, right? If you go down to the 15-minute, there is kind of a smaller supply zone right here. I didn't draw it out again because I want to focus on the bigger time frame one. And in this case, it was a 45-minute zone. Okay. So that's another question that I get a lot. Also, let me see my notes, see if I'm missing anything. Let me start checking off what I talk about. Okay, so I mentioned how I check every single time frame. I don't mark every single zone that I see. Okay, I try to focus on my bigger time frame zones. Now, let's talk about how I use supply and demand, right? I am a breakout trader. Okay, I trade New York session on NASDAQ, and what I look for is a breakout to either the downside or the upside. And then I aim for the next zone. And this was just a perfect example of it, which is another reason why I'm also going over it. But let's say that there wasn't any zones near price action before the market opened up, then I would wait for price to hit my zone. I wouldn't predict if the market was going to go to my zone. I literally just wait and I wait for my setup to come to me. Okay. So let's just say there wasn't any zones around price when market was about to open up. Honestly, I wouldn't expect the market to really move too much, okay? Because there is no close orders. There is no big orders around it, okay? That's another tip there. But yeah. So let's put this in replay mode because I kind of want to show you guys how I use supply and demand. And if you've seen my trade recaps, you guys know I use support and resistance, but I only take my trades off of supply and demand. Okay, so I'm not gonna go over that, but yeah. So this is actually kind of how I had my zones, right? I always try to look for zones. For example, for this, right? Pre-market, I look for zones that we could potentially break out of. I don't look for zones that we could bounce off of. Again, because I am a breakout trader, I want to look for a breakout to the upside or the downside and then see a continuation to the next zone. Okay. So on choppy days, I don't like trading choppy days because what happens mostly on choppy days is price will open up, it will either fake out and then it'll continue to trade within the zone and it won't break out, right? Another thing on choppy days, what happens is, right, we chop up, whatever, we break out of a zone and then we just chop through it in a certain direction. If it's not like that, then it's the same thing but to the upside, but you slowly move up, and I am not good at trading in those markets. I want to get in and out, okay? And this is a great example because on Friday it was a beautiful trending day, which leads me to my next point, which is yes, this strategy is going to work in choppy markets. Me personally, though, I think it works way better on volatile markets where the market knows where it wants to go. Another thing is timing. I'm not going to trade supply and demand overnight at 7 p.m. Eastern, right? I want to trade this when all the big boys in Wall Street are trading this, okay? You want to be with the big fish, so trade with them, okay? Don't trade at random times. I don't trade in the afternoon. If I do trade in the afternoon, then it's because the morning was choppy and maybe I want to, I don't know. Maybe I want to get a move or whatever, or maybe the market is moving better than it was in the morning. Another thing before I talk about how I use it is I don't use supply and demand. For example, let's say this is a zone right here, right? I would not trade this zone because price has already ran through those orders from both sides, right? Like we've basically chopped through this. Um so yeah, that kind of gives you an idea of what I actually look for, which is new areas. Or if not new, then areas that haven't been touched as much, okay? But yeah, so I only trade New York session. Right around 9:15 I start charting. So this is actually how my chart kind of looked. And I really like this 45-minute because price had already made a reaction off of it. Now, just because price made a reaction rejecting the zone, it doesn't mean that I'm expecting to price to go up, okay? I am just waiting for the market to tell me where it wants to go. So, and this day was perfect because I had zones very close to price action from both sides. So, what I was looking for was either price to bounce off of here and then break this and continue going up, or I was looking for price to break this and continue going at least to the next zone. Okay, at least. um so yeah. Whoops. So yeah, this is how I basically had my chart on Friday. I look for zones close to price action from both sides in case price does break out of either side. I'm prepared for it, right? In this case, it broke down to the downside, which we already know. But you're probably wondering, well, how do I know when to enter? What I look for is either a momentum break of the 50% line. So sometimes if it breaks the 50% line, then I immediately get in, right? But I do this when the markets are like extra volatile, right? Because you want to get in and get a good entry. So the perfect entry would be right at 50%. And then I would either put my stop loss above the zone, right? Because my thinking is, if we do break it and then break out of this zone to the upside, then we're going to continue going up. So I wouldn't want to be in shorts. But if we continue going down, maybe it might retest the zone and continue going lower, right? But this would be the perfect entry. Like, this is what I try to get most of the time. And a confirmation for me would either be, again, like a momentum break or a 5 minute candle close below the zone. And in this, in today's, not today, sorry, in Friday's market, right? The first, I would say, 20-30 minutes. Yeah, it was 30 minutes. Price was very sad. Like, it was very undecisive. And I was like, okay, most likely I probably won't trade today because it looks like we're going to continue in this range that we're in. We're going to continue moving sideways. So I was like, instead of getting into shorts immediately after we break the 50% line, I said, okay, instead of just maybe getting faked out, let me wait for a 5 minute candle to close. And I did. And as you can see, sometimes it's kind of a not a bad rule, but sometimes you kind of do lose money off of it. So in this case, what I should have done was, if I'm seeing market move fast to the downside and get out of the zone, my ideal entry would have been like this: entry right below the zone, and then my stop loss right above this 50% line. And then I would have aimed for the next zone. Okay. And then that would have been perfect. Or sometimes I aim for the next zone or the 50% line of the next zone. And something that I've realized is that on trending days, with NASDAQ especially, it will continue to go down in that direction, especially if it really wants to. But it happens at least one day out of the week where it just continues to go in a certain direction for the whole day. And you can get your best entry using this strategy. Now, I'm not saying like every single time, because me personally, Friday, my entry was down here again because I was waiting for this 5 minute candle to close, which sometimes is bad, but sometimes it really saves you because you can easily get faked out, you know. But yeah, this is basically it. I look for supply from both sides before the market opens up, right? So right around here, I look for supply to the downside and the upside, and then I look for a breakout. This only is really good again on trending days where the market knows where it wants to go. It's not really good on choppy days again because on choppy days there's a lot of fake outs. And this day I thought it was going to be a choppy day because the first 30 minutes were choppy, and then after 10 a.m. news it chose its direction, right? But this is, for me at least, it's very simple because I don't have to guess where the market is going. I kind of just have to wait for the market to tell me what to do. Okay. And again, which I kind of already said, the best timing to do this is New York session. You want to trade when it's volatile, right? You want to get in and out. At least for me, I'm a scalper. I don't want to be in the markets for hours. I want to get a quick move, get my money, and head out. But recently, I kind of have been not realizing, but just I've been more confident because I've seen the same thing happen so many times, and where the market chooses its direction for the day and it continues to go in that direction without really pulling back. So, not saying that like it's something that I am going to continue to do, but when I see the opportunity and I get a good entry, I will hold it for the whole day. Like I will swing it, right? Cuz I know I've seen it so many times where if I just held that trade that I took around 9:45 or 10 a.m., I would have had 1,000 ticks plus, which is beautiful, right? But let me see what else I should talk about. Yes, I'm looking for a breakout, right? Um yes, sometimes, especially on choppy days, instead of a breakout, I literally just get like a test of the zone and then we reject. I'm not really good at trading like that. I'm way better at trading breakouts, so I just stick to it. Not saying that like, oh, I'm not trading how I'm supposed to trade supply and demand, because I have done it before, but me personally, like if I look at my past, the best trades that I've taken, it has been from breakout trades. I'm not saying that you should trade just breakouts with supply and demand because that would kind of be silly. I'm just saying personally, like it works the best for me, especially at that 9:30 New York open time. Okay. And again, I kind of already talked about it, but I'm going to go over it again. When I do get into a trade, I'm looking for price to go to the next area of interest, right? So for me, for example, this day, let's say I went short here, my next area of interest would either be an area of support or resistance or an area where there's supply and demand, right? What is supply and demand? Aggressive orders, okay? The market wants to hit these orders. So it's like a magnet, right? It's kind of the same with support and resistance. Like most of the time, my support and resistance lines will line up with my supply and demand. At the end of the day, these zones are just areas of interest where the market wants to hit those orders, okay? That's really how I think of it. I don't think of it as, I don't know, its supply has to go down from here. No, I just think about it as an area of interest. And also keep in mind that the market is never going to be perfect. So don't expect it to be perfect, okay? that's kind of basically it though. It's very simple. I just look for aggressive moves, which is just aggressive orders, and then I look for price to hit those orders and then continue, right? Which continuation is very key, especially at least to the next zone, and you're not really going to get that in a choppy market. So, that's another thing. Why does this strategy work? It works again because supply and demand, and I'm going to say it again. I'm going to say it because it's very important. It's just aggressive orders. Nobody knows if price is going to bounce or sell off. That's why my 50% line is here to get an idea of it, right? I'm like checking off every every time I talk about a point. And then yeah, the market moves off of orders. And then yeah, I kind of already said this. If there is an area where there is a lot of orders or an aggressive move, the market is going to be attracted to that area. It's just like liquidity. If you don't know what liquidity is, let's just say, it's this right here as an example. Liquidity is just an area where there is a lot of orders, and this is basically it. It makes sense because a lot of people will either have a stop loss here most of the time, or I don't know, a buy or sell, because it's just an area of interest at the end of the day. Vice versa, it's very simple. And last thing is, I really love this strategy because it allows you to have a good risk to reward ratio, right? For example, let's say this was your trade and you just aim for a 1 to 2, boom, like that's it. But if you wanted to aim for the next zone, perfect. And like I said, on trending days, you're going to see just an insane risk to reward ratio that was possible. Even with the trade that I got on Friday, that was a late entry, I would have had 1,000 ticks plus if I just held that trade. And I didn't even get the best entry, but I knew we were going to sell off because we had broken this area where we were bouncing off of in pre-market. And I had an idea that it would go all the way down here. Why? Because we've been bouncing at this zone down here for basically the whole month, and now we're basically breaking the zone. So I wouldn't be surprised if we continue to go down here. And it's funny because when I saw this rally up, I was like, that's a slow move up. Most likely this is a bull trap and we're going to continue to go down. And what really kind of clarified that was again, this is off topic, but it has to do with price action, right? If you look at this area right here, it's definitely an area of interest, and I bet you $1,000 if you go before, it's definitely been an area of interest before. This is not like a coincidence, okay? It happens a bunch. Anyways, right? Area of interest, we've bounced off of this, we break through it, we're rejecting it, rejecting it, rejecting it. If we broke through it, I'm expecting price to push up, right? Because resistance will turn into support. But this day, where price retested this area, it failed to bounce up. So I saw a continuation, or I was expecting it to go back down because it failed to bounce off of this area. But yeah, that's basically it for supply and demand. I mean, it's really simple, and you're going to see it in the market a lot. Like, I could spot this out, boom. And then for me, it just makes sense to have the 50% line there because, again, just because it's an area where there's a lot of buyers at one point, it doesn't mean that it's always going to go up from there. So the 50% line really just gives me an idea, or like a really good guess of, okay, yeah, we're definitely going to continue to go down this way or up this way. But if you have any questions, let me know. I'll probably make another supply and demand video, or I really want to make a detailed video on my strategy also, because yes, it has to do with supply and demand, but I also mix in the 15-minute orb strategy, and then support and resistance. But I'm telling you, like, supply and demand is my bread and butter. Like, that's really all I use. Anyways, if you want to trade live with me or work with me one on one, link below. And thank you for watching.